Sell, sell, sell! Is this the end of the bull run? Or is this just another buy the dip opportunity? Let's take a closer look. Today is March 20th, 2019, and this is a market update. Interesting day in the market. Markets popped up this morning. Dow Jones was up about 200 points at one point in time. We had some momentum going into the Fed meeting, and then all of a sudden things reversed, and we ended the day a little bit lower. So if we're looking at the Dow here, I love to start with the Dow. We don't get any volume on the actual Dow Jones. We can use the DIA ETF if we want to look at some volume metrics, but I'm going to look at a 4-hour chart to start here on the Dow Jones Industrial Average. And the first thing that should pop out to you, and pops out to me, is the potential for a lower high here. So what we've done recently is we've had some more momentum to the upside after a little bit of a pullback, and we have not been able to break the previous highs that we've seen here on the around February 25th. So if I were to just draw, let's just say I'll draw a horizontal line there. You see that we're just shy of that horizontal line. So this could be an indication, especially since we are overbought at this point in time. This could be an indication that we're not going to be able to break past the previous highs, which means that we may be putting in a lower high, which could be the start of a little bit of a trend reversal here. We've had an uptrend since December 25th, and we're seeing signs of weakness in that, especially here on this 4-hour time frame. If we go ahead and just take a look at the price action here, just digging in a little deeper, getting a little closer view, I want to draw some Fibonacci price retracement lines. So if I take the previous high here on February 25th and I go down to recent lows, what we can see here is right at the 76.4% retracement, which is a very, very common retracement area. That is right where we stopped on the 4-hour chart today. So we were not able to break through these areas of around 26,000. So this would be an area of strong resistance where I would expect to see a pivot in the price. Now I'm not sure what tomorrow holds. We'll look at some of the smaller time frames to try to get a bearing on that, but for now this looks like a pretty solid wall and the potential to put in a lower high, starting us in the downward direction. Over here on the 3-hour chart, which is just a 180-minute time frame, more of the same. Lower high, we have our oscillator here. Our stochastics are certainly overbought at this point in time, and in addition to that, we're seeing a weakening MACD almost to the point of histogram cross to the downside, which would be a very bearish indication. I want to actually pull up a 2-hour chart now just so we can take a look at that. And what we're going to see on the 2-hour chart will tell us a little bit more about what we can expect in the near term. So here on the near term, it looks like we have actually crossed on our MACD. We have a definite lower high at that point in time. It's been confirmed by a cross down on the histogram of the MACD, so we've put in a lower high. That would constitute a trade for many, and I would fully understand that. So what that means is by tomorrow, we'll take a look at the 60-minute chart here. By tomorrow, we could expect to see some downward momentum. Now that doesn't mean that the market will open down tomorrow. Lots of times as we start to see some more downward momentum, we can actually see a pop in the morning to the upside, but that will be drawn down later by some type of news event or some type of something that affects the political climate, or you name it. But just looking at the technicals, there's really two scenarios that can take place. As we can open up significantly lower tomorrow and then continue that down move until we see these oscillators digest that move. Or what we could see is some strength in the futures AM in the morning before market opening, pop up, maybe try to retest this recent high that was placed in actually yesterday on the 19th before falling down and carrying out this downward move. If I jump over to the IWM, which is an ETF for the Russell 2000, we're going to see more of the story play out here. We've also confirmed a lower high on the IWM one of the things that we can see here that gets interesting, since we're now looking at an ETF, is we actually have some volume measures. And one of the things I want to point out is that when we have these bullish moves to the upside, you can see that these green volume ticks are a little bit higher than the red, so they're showing more momentum on the upside. When the spikes in volume to the upside, it's when we see these spikes in red volume that we start to see the price reverse. Okay, so if we see the red volume overtaking the green lines, that's going to be indicative of some downward momentum. It's only here where the green overtakes the red that we start to see a blip up, and then red takes control again. And then back here on lower volume, the green has been able to, try to surge back, but it did so on lower volume. The green has actually been stronger here in the near term for the last week or two of March. But now what we're seeing today is we're seeing more strength in our red volume candles. So that's something that we're certainly seeing on these time frames. Let me jump over to a 3-hour time frame. I think we actually had a confirmation to the downside on a 3-hour time frame today. On the Russell, yes, we did. So we had a cross down on the histogram here, locking in a lower high. We're still seeing some strong green volume, but nothing that has made it to the levels of the previous red volume. So that is indicative of some bearish control and some bearish strength there. Some of the bears taking back some action there, if you will. I've switched over now to the S&P 500. Or the SPY, which is the Spider S&P 500 ETF. A little bit of a different story here in that we've actually placed a higher high relative to previous highs. So it's not exactly what we saw on the Dow or the Russell. The components of the SPY have actually placed in higher highs, but there is a telltale sign going on here in the form of a potential bearish divergence. And what that simply means is that the price here, this recent high that we saw today on a 4-hour chart, in relation to the previous high, well, it's obviously higher, but our oscillator has not made it to the levels of previous highs. So when the previous high was met, our oscillator was at a level of 94.32, and today we are only making it to a level of 88.68 with a higher price move. So essentially what that is that's a bearish signal. Typically when that happens, we see some bearish move in the market, and so we're seeing that as we jump over here to the 3-hour time frame. Very strong red volume bar today on the first or maybe the second half of the day. Here we had a red volume bar that overtook all of the previous green volume bars. Again, that's indicative of some bearish activity, so would not be surprised to at least see these oscillators come back down to the oversold areas. Jumping over to some smaller time frames here, let's just go ahead and take a look at the 2-hour time frame of the SPY. That has been confirmed. We actually have a smaller bearish divergence here in that today's price action popped up higher than some of the price action from, say, about a week ago, and our oscillator was not able to match that and has now confirmed down movement on our MACD. So again, we're seeing that type of thing here. I'm going to switch over to a 60-minute chart. Had a little bit of momentum here at the very last part of the day, but that wasn't a full candle. That's only a 30-minute candle, so sometimes we disregard that last volume bar. So what we're seeing is some strong downward momentum there. And if we come over to the, let's take a look at the Qs really quickly. The Qs, they're very similar to the S&P components in that they are setting up for bearish divergences, where we're seeing new highs placed, but indicators not able to fully make it to their previous high levels. I'll take this and turn it into a 4-hour chart. There's actually not a bearish divergence on the 4-hour chart with my oscillators, but there are some on some of the smaller time frames. So we're seeing strength in the technology sector here, and a little bit of weakness in the industrials. Certainly the Dow is being pulled down by things like Boeing and the events of last week. So Boeing has really pulled the Dow Jones down for sure. This afternoon FedEx warned that the whole globe is slowing, and so FedEx has released that report this afternoon. So I look for more doom and gloom over the rest of the week. So I can just see the writing on the wall there. So maybe a little bit of hope tomorrow morning, but that will be followed by some downward pressure in stocks. And so if we just go through and just look at some stocks, it probably won't be hard to see that we'll see a lot of these price patterns. We see things like Baidu not having a lot of momentum, a lot of strength recently, getting to overbought levels, lower than previous overbought levels. I'm just randomly picking stocks at this point in time. Bank of America is putting in a potential bearish divergence. If I pick up something like Walmart, I don't feel like waiting on the data to load there. Yep, there's Walmart. Walmart's putting in a lower high. So if we take a look at UPS is certainly going to be affected by the news on FedEx, and there we go. So we have an overbought area on a 4-hour chart. Our oscillator is overbought. The previous time that it was overbought, the price was actually higher than currently. So there's some downward momentum there again. If we go and look at some technology stocks, taking a look at IBM, if this would load for me. I'm going to skip past it if it doesn't load. Okay, IBM actually showing some strength, which isn't a surprise based on the fact that I've already explained that the technology sector is doing pretty well. If we come over here to banking, we'll take a look at Goldman Sachs. Goldman Sachs looks like it is putting in some bearish divergence activity here. Wynn Resorts and Casinos. Wynn's actually not been doing very well for the past month or so. So Johnson & Johnson, another large market component. Not a whole lot of help there on the Johnson & Johnson chart, but we're always going to reflect back to these major indices. We're going to look at the Dow, we're going to look at the S&P 500, the Russell 2000, we're going to look at the Qs, we're going to take a look at the NASDAQ, and we'll actually jump into some of the sector charts as well. And we're seeing this across the board. We're seeing either lower highs being confirmed today, showing downside momentum, or bearish divergences being confirmed today on smaller time frames. So what I'm looking at is I'm looking for entries to buy puts. I want to buy puts to make money to go to the downside. If you are long short stock, then this would be a perfect opportunity to kind of scale out of some of your long positions and enter into some shorter term short positions. Overall, I'm bullish on the market. If I look at larger time frames such as the weekly time frames, monthly time frames, everything's the monthly is kind of that's a little wishy-washy, but the weekly is still showing some strength to the upside. But I do see a pullback here in the near term. And tomorrow morning, if I get an opportunity to scale into some puts, that's exactly what I will be doing. I'll be buying puts that expire next Friday, hoping to capitalize, maybe make a 100, 200, 300% return on some of these put option trades. But I will take a look in the morning to determine whether that's something I am going to do or not. But for now, I am very hopeful that I can make some money to the downside. So hopefully this was helpful. I will check in later this week, make some more videos. In the meantime, I hope that you're able to make a tremendous amount of money. Read the markets in the morning, pay attention to what happens in the pre-market, and then what goes on during amateur hour tomorrow, which is actually later today because it's after midnight, March 20th, 2019. Signing off for now.